Hey guys, it's Angelo Christian with another great edition of Real Estate Insider inside of our new studio. And today, one of our big focuses push for 2020 is investors. We cater to investors all over the country, us being a private equity firm. And today we're actually going to be breaking down, if you guys are out there trying to invest, you're trying to figure out what is the difference between, hey, I can invest with a REIT, or I can invest with private equity, and what is the difference between a real estate investment trust and private equity, right? So we're gonna be breaking down, comparing the difference between a REIT and a private equity firm. Just so full disclosure, Angelo Christian Financial, we are a private equity firm, that's what we do. But I wanna look at this objectively and explain this out to the investors, the marketplace. You guys can actually see, I've had this board created right here so you actually look at the differences between a REIT and private equity. So let's go ahead and take a look at it. We can actually see what the differences are. So first off, let's start with a REIT. So what is a REIT? A REIT is a real estate investment trust, right? There's a lot of pros, there's a lot of cons to a real estate investment trust. The first thing you want to know about a real estate investment trust is that it's usually, in the public markets, the equity markets, it's very liquid because you can buy shares inside of a REIT. There's a lot of MLPs and there's mortgage REITs, which is where all of the asset class is considered of the mortgage-backed securities. And there's also equity REITs, which is like, malls, strip centers, multifamily. There's also private REITs that's listed with the SEC, but it's not actually publicly traded. And so a lot of the benefits, as you can see, I'm going to show you up on the board here. So the first thing that you can see with the REITs is that you can buy shares. Like I said, it's very liquid. You have very stable returns. Historically, REITs can earn anywhere from 8% to 15%, just depending on the REIT and the structure of it. So, but you do have limited growth with a REIT because what happens is one of the requirements of it is that they have to disperse over 90% of the earnings through dividends to the shareholders. So the REIT's not really going to grow a lot, but it's going to act like an annuity and pay out the shareholders. So, this is for probably people that, if they're older and they're looking for a stable return, they have a lot of capital that they want to invest, you're going to get anywhere from an 8 to a 15% return through your REIT based on the asset class that they're invested in, right? It is some of the downsides of this. It is taxed as ordinary income. So you have to keep that in mind. It's going to be taxed as ordinary income. So, like I said, this is probably, there's a lot of different REITs you can actually research online. And then if we go over to the private equity side over here, this is basically, something that is less regulated. You have something that has very great latitude because they don't have to just invest, in real estate. It's almost like a hedge fund. They can invest in different across broad-based asset classes. And usually the income is derived from my favorite thing, which is, carried interest, or you can, capital gains, or from you sell a business. If you sell a business, the investment gains that you get from the sale of a business. And so it's very tax efficient because the partners or the people that are involved in the fund or the deal, they can benefit from the tax, writing off the depreciation on their taxable income. So that's a huge benefit, being able to use that depreciation as a tax write-off. And then also, usually the partners have skin in the game. Like, in my company, I'm all in with all my money with my company, right? So, and, the compensation is very clear cut to all the partners and everyone involved. It's mainly based on performance, right? The fees, there's front-loaded fees with a REIT. There's also going to be fees that you pay to the syndicator or to the manager here, but it's purely based on performance. Like anything that we do with my company, how I get paid is based on the performance that we do. So these are the biggest differences between, if you're looking to invest in versus a REIT or a private equity. This is for people that I would say that if you have money that, if you want greater returns, greater upside, you have the tax advantages with private equity. This is the side that I like, but there's a lot of people that are on this side that love REITs, and that's why you have the different asset classes that you can invest in. But my name's Angelo Christian. I've been an investor in the markets with real estate for over 15 years. I love to talk to you about, we are a nationwide lender. We specialize in commercial, private money, private equity funding. So if we can help you with any deals, reach out to my office at 832-431-6331. Also click to subscribe to our YouTube channel. We work very hard to educate, empower the world with investments in the markets and real estate. Thank you so much for watching my show. Take care and peace out. Bye-bye.